Millions of veterans and active duty service members qualify to buy a home with no money down and no mortgage insurance. But many don't use it. The goal with this video is to fix that. I'm not only going to be answering the most common VA home loan questions, but we're going to be talking about eligibility, benefits, costs, along with the process, so you know exactly how to use this tool. For those of you who might be unfamiliar, VA loans are a benefit for military members, as well as veterans and some spouses. And my goal here is to cover everything from who qualifies to how to apply and also how to use it multiple times. And while you're going through this video, if you find it helpful at all, make sure you hit that like button and subscribe to the channel for more real estate and mortgage content just like this. So what is a VA loan? It's a mortgage that's backed by the U.S. Department of Veteran Affairs, and it's there to help eligible borrowers buy a home. But something I want to be very, very clear on, the VA does not lend money. The loans actually come from banks, credit unions, and mortgage brokers. So understand, whoever you're talking to in order to get your VA loan does not actually work for the VA. And the reason I bring that up is because some people can misrepresent themselves and make you feel like they're your only option when trying to get a VA loan. And that simply couldn't be further from the truth. Now we're going to talk about that more later in the video, but let's take a minute here and talk about the key benefits of using VA. The first of which, no down payment requires. You can buy a home with no down payment. That means you're putting 0% down and financing 100% of the balance of that loan. Now, typically, when you put less than 20% down, you're going to have mortgage insurance associated with that loan, which is an additional monthly fee on top of your principal and interest payment for that mortgage. But the one nice thing about VA loans is there is no mortgage insurance. And if that weren't enough, the other key benefit is that VA loans have very, very competitive interest rates. In fact, probably the most competitive of any loan program out there. And in my experience, that usually translates into about 0.5% better in mortgage rate than that of conventional loans. So if you have the option to use VA, then my recommendation is you should absolutely do it. And that's because conventional and FHA loans both require a down payment and both require mortgage insurance. But the nice thing about VA loans is that the VA is guaranteeing a portion of that loan, which in turn allows lenders to offer better terms. So let's take a minute here and talk about who is eligible to actually use a VA loan. The first one is active duty service members. You've had to serve 90 consecutive days of service. And you also have veterans with a honorable discharge. Now, there are some service requirements that are required, and I'm going to tell you how to get those here in just a minute to see if you actually qualify. But that takes me into the third person that's going to qualify for that loan, and that's the National Guard or the reserves. And in this case, you typically have to serve at least 6 years or 90 consecutive days if you've been activated. And the next one is going to be surviving spouses, and they're going to qualify if the veteran died in service or from service-connected causes. Now, I know in some cases it can be really hard to determine whether or not that means if you can actually qualify, and that's why I want to talk about how to confirm your eligibility. There's something called a certificate of eligibility that tells you you actually meet the requirement in order to get a VA loan. And the easiest way to find this is by going to the VA website. You have to log into their portal. It's going to be under the e-benefits tab, and in there you're going to be able to pull your certificate of eligibility. Now, your lender can do it on your behalf once you're in that pre-approval process, and we'll talk about that a little bit more later in the video, but that's going to be the easiest way to determine whether or not you actually qualify to use a VA loan. Now, some of the myths and confusion around this is some people think I didn't serve long enough, and another one that's really confusing is people believe because they've used the VA loan in the past that they're not able to use it again. And again, that's simply not true, because you can use your VA loan multiple times, but with that, there are some restrictions around it, and it basically comes down to how much entitlement you have left in those benefits. Now, just a moment ago, I mentioned some of the benefits of using a VA loan, but again, I want to state them so that it's very, very clear and you understand why VA loans are really the best loan out there. The first, again, no down payment, which is basically saving you thousands of dollars up front. The next thing, no mortgage insurance. Again, that is a monthly fee that you're able to eliminate, which is going to mean a lower monthly payment. You also have lower mortgage rates. Not only is this going to save you money monthly, but it's going to save you money over the long haul. And now this is one I didn't mention earlier, but they have flexible credit requirements. You can actually have lower credit scores and get the same interest rate as somebody with a higher credit score using a VA loan. And while the VA does look at your credit score, your overall profile isn't impacted nearly as much as it is with, say, an FHA loan or a conventional loan. And the next thing is you're going to have limits on closing costs. Lenders can't overcharge. There's certain charges you can't be charged when using a VA loan. So ultimately, you're saving money not only on the down payment, but also on the closing costs. So let's just say, for example, you're buying a $300,000 home. Well, with a VA loan, you got no down payment, you got no mortgage insurance, and you have a lower interest rate. Whereas with conventional, if you were doing, say, 5% down, that's a $15,000 down payment that you're saving, and you're also probably saving somewhere between $100 and $150 per month in mortgage insurance. And the reason all of this matters is because it makes homeownership more accessible to military families. So before we talk about how to actually apply for a VA loan, I want to talk about the types of properties that you can finance with VA. But I want to be very, very clear. Whenever you're buying a home using a VA loan, it has to be your primary home. That is a home that you are going to live in with yourself or with your family. It cannot be used as an investment property. Now, at some point in the future, if you decide to buy another home or move out of the area, you can turn that property into a rental property. But your original intent with buying that property has to be that you are going to live in that home. So with that said, you can buy a primary home. That can be a single family home. That can be a condo. It can be a townhome. And it can even be a duplex. But one thing that's very, very important to know is if you're buying a property and it's a condo, and you're using a VA loan, it has to be VA approved. That condo has to meet certain requirements with the VA in order to use that type of financing. Now, I've put a link in the description of the video where you can go and look at certain complexes to see whether or not they're VA approved. But here's what I'll tell you. A lot of times, they're not represented correctly in that chart. So you might have a property that is actually VA approved and you can't find it in that chart because it's not named correctly. Maybe it's listed by the tract versus by the community name. Now, it would be a lot easier to look up if it was by the community name because you know the community name. You probably don't know the tract number. So oftentimes, a property can actually meet the VA loan requirements and be approved by the VA and you not know because it wasn't looked up properly. So just make sure not only are you working with a real estate agent that understands VA, they know how to look up these properties, but also a lender who understands VA loans as well. Now, another thing you can use VA loans for is to build a home. You can also use them to renovate a home, as well as when refinancing. There's something called a VA Streamline that once you have a VA loan, you can refinance back into a VA loan. And the second time, there's no appraisal required. There's no income documentation required. It's a very, very streamlined process, hence the name VA Streamline. But my guess is most of you are watching this video because you're buying your first home using VA. So the main thing to stress here is that it has to be a primary home, cannot be an investment. So how do you actually apply for a VA loan? The easy answer is don't go online, don't go on Google and search VA lenders, VA mortgage, VA anything, because what you're going to get is a lot of people that have paid to be at the top of those search results in order to get your business. And what I'll say is there's a couple of companies out there that when you do that, they look like they're just for veterans. They look like they have your best interest in mind. Well, what I want to tell you, those companies not only overcharge in fees, but they are likely also going to give you a higher mortgage rate, which in turn means a higher mortgage payment. In addition to that, a lot of them have overlays on their programs, which basically means the VA has certain loan requirements that lenders need to follow. But what some lenders out there do is they put additional guidelines on top of those to make the requirements even more strict. So you might be somebody that could qualify for a VA loan, and you could call one of these companies that have overlays, and they say, well, you don't meet the requirements. And in your head, you might think, I can't qualify for that loan, when in fact you can. You just need to find a lender that doesn't have those overlays. So instead of going on Google and searching for lenders, do me a favor and go to that link in the description of the video. You can work directly with my team. We've helped hundreds of people, not only with VA financing, but with all types of loans. So if you want to do business with someone that has your best interest in mind, do me a favor and check that link in the description of the video. But with that said, once you actually talk to this lender, there's going to be a couple of steps that need to take place. Whether it's with us or with someone else, you're essentially going to have to start that process with some sort of conversation with a lender to go over what it is you're trying to accomplish. And in some cases, that might mean filling out a loan application first, while other times it might mean answering questions that you have about the process in order to get to that loan application. But once that loan application is filled out, you're going to have to provide pay stubs, you're going to have to provide W-2s, you're going to have to provide bank statements the last 2 months. In addition, the lender is going to need to pull that certificate of eligibility that we discussed earlier. Now, in some cases, maybe you already have that document because you did it prior to this conversation. If you haven't, the lender is going to need to see that document in order to make sure that you're actually eligible for a VA loan. And one thing thing I didn't mention is the lender's also going to pull your credit. So they're going to look at your credit. Although your credit isn't as big of a factor as other loans out there, they are going to look at your credit scores. So once they have all of that information, assuming you meet the guidelines, they're going to tell you how much home that you actually qualify to buy with no money down. And from that point, you're pre-approved, if you will, and you're ready to go out to start making offers on homes. Now, one of the questions we get all the time is how soon is too soon to start this process? And my answer is always the same. It's never too soon to start the process. Whether you're thinking you're 30 days out, 90 days out, 6 months, a year out, start having the conversation now. That way, if there's something you need to work on, you have time to work on it. Maybe your credit isn't great. Maybe you ruined your credit while you were overseas on duty and you came back and your credit score was garbage because you just didn't pay things on time or whatever. Well, now you got some time to work on it versus being somebody that decides they're ready to buy a house next week and then they start the process now and then find out, oh crap, I've got to go work on these things. Or I didn't know I needed money for closing costs. I thought that because I was able to buy a home with no money down, that everything was covered. That's not true. VA doesn't have a down payment requirement, but a lot of times you're going to have closing costs that are required on that loan. So you're going to likely need some money of your own in order to qualify for that home. Now, in some cases, you might be able to get the seller to give you a credit for those costs. In some cases, the lender might be able to give you a credit towards those costs. But in some cases, maybe not, and you're going to need some money for a down payment. That's why the earlier you go through that pre-approval process, the better off you're going to be when you're actually ready to pull the trigger. No pun intended. Now that's going to take me into actually talking about the costs. What are the costs when using a VA loan? One thing you're going to have on every single VA loan, unless you're a disabled veteran, if you have more than a 10% disability rating, this is not going to apply to you. But if you don't have more than a 10% disability rating, you're going to have something called a VA funding fee. That VA funding fee is 2.15% for first-time homebuyers, which means if you're buying a $500,000 home, you're actually going to be financing $510,750 because that funding fee is actually added to your purchase price and it's financed in that loan. Now, you can choose to pay it out of pocket. Most people don't do that. In fact, I've never heard of anyone actually doing it. They always finance it in because most people buying a home with no money down, they don't have an additional $10,000 to put down toward that funding fee. But with that said, regardless of your credit score, the funding fee is going to be the same unless you are more than 10% disabled, as we mentioned a moment ago. So in addition to that funding fee, you're likely going to have some closing costs. Now, we mentioned earlier, maybe you're able to get around them, but you should plan on somewhere between 2 and 3% of your purchase price in potential closing costs, which again means if you're buying a $500,000 home, you should probably have somewhere between $10,000 and $15,000 set aside. Maybe you don't have to use it. Hopefully you don't have to use it, but in some cases you might. So it's better to have it and not need it than need it and not have it. And outside of that, the only costs you're going to have are your monthly mortgage payment, which essentially is going to be the principal and interest, taxes, and insurance that are associated with that property. There's no mortgage insurance, as we mentioned earlier. So once you actually close on that home, those are really the only fees that you need to consider. But also remember, because you put no money down and you bought that home, and you likely finance that funding fee into the loan, you're actually going to owe more on that home than it's worth at the time of closing, which is really, really important to note that if you're buying a home, you probably need to plan on being that property for more than 5 years. In fact, my goal for telling people that are buying homes is you need to be in that property somewhere probably between 7 and 10 years in most cases. And that's not because I believe prices are going to crash, but when you sell a home, there are costs involved. And when you're buying a home with no money down, and then you're financing that 2.15% on top of it, you're already going into that home with absolutely no equity. You're owing more than it's worth. So it's important to know that you're going to have to own that home for a period of time in order to have equity in that property and end up selling it for any sort of a profit. Now I want to talk about using a VA loan more than once. I can't tell you how many times I talk to a veteran or somebody that's had a VA loan and they say, well, I've already used it. I can't use it again. Again, that is not true. You can use your VA loan more than one time. It all depends on the entitlement you have left with your certificate of eligibility. So if you have a property that has a VA loan on it and you end up selling that property, then you're restoring that full entitlement and you're able to go buy another property with 100% financing. Again, no down payment. But in some cases, you're not getting rid of that property. You're keeping it as a rental or you're doing something else, which in that case, you're still able to use a VA loan, but you might not have full eligibility. You might not be able to buy a home with no money down. It might require some sort of down payment. That's why it's super, super important to make sure you're talking to a professional going through this process, just so they can look at your entitlement to see exactly how much it would require, if anything at all. Now, before we recap, I want to debunk some of the myths out there. VA loans are not just for first-time home buyers. You can use them multiple times just like you can any other loan. VA loans are not complicated. They're just like any other loan. In fact, they're probably the most lenient of any of the loan programs out there. But one of the stipulations is, again, you have to be able to qualify for it by being a veteran or a spouse of a veteran, as we mentioned earlier. Another thing I often hear is sellers don't like VA loans. And in some cases that could be true, but the reality is most sellers don't understand VA loans. When they're prepped on what a VA loan is, how they benefit veterans, most people are game for them. They would love to see a veteran buy a home. So don't go into the process thinking that, sellers are going to frown upon you because you're using a VA loan. It's all about the agent you use and the lender that you use being able to have that conversation with the listing agent on the other side so that they can convey the right information to their client if you end up submitting a VA loan. We get VA loans submitted and approved all the time. So if you're someone considering using a VA loan and you want a professional team, make sure you use that link in the description. So hopefully I've conveyed how powerful a VA loan is. Remember, the eligibility is broad. It's not some small subset of the population. Yes, you have to be a veteran. Yes, you have to meet certain qualifications, but it's very, very lenient. And with that, the process is really, really straightforward. Just make sure you're working with people that understand VA loans. In addition to that, I believe if you qualify for a VA loan, you should absolutely consider it. It should be your top choice in many cases, but don't let it be the end all. If you have money for a down payment and you just want to see what a conventional loan looks like or an FHA loan looks like, make sure your lender is giving you all the side-by-side comparisons, VA, conventional, FHA, everything that you qualify for, so that you can see it on paper and you can see how it should stand out against all the other loan programs out there. So again, if you can qualify for a VA loan, it's probably the best path for home ownership. So don't let people on the internet, this confusion, myths out there actually hold you back. If you have more questions, make sure you drop them in the comments and make sure you subscribe to the channel if you found any value in this content at all. Thanks for watching, and more importantly, thanks for your service.